How many vendors does it take to meet all your organization's food needs? Just one. EasyCater, the workplace food platform that lets teams order from a huge variety of restaurants, over 100,000 nationwide, all through a single vendor. In addition to all that variety, EasyCater also gives you full visibility of your organization's food spend with invoicing, centralized reporting, and seamless integration with expense management systems, all on one platform. EasyCater, your business tool for food. To learn more, visit easycater.com/podcast.
Okay, I have 30 seconds to explain Canva, and that's impossible, but here's a glimpse. Canva can take your presentations to another level. With Canva Video, you can generate awesome videos with one prompt. Canva Docs lets you create stunning visual documents, reports, plans, whatever. Magic Write can write in your voice using AI, and Canva Sheets makes spreadsheets people will actually like. Canva lets you bring your big ideas to life as fast as you can think of them. Put imagination to work at canva.com.
Did my card go through?
Oh no.
Your small business depends on its internet, so switch to Verizon Business. And you could get LTE business internet starting at $39 a month when paired with select business mobile plans. That's unlimited data for unlimited business.
There we go.
Get the internet you need at the price you want. Verizon Business. Starting price for LTE business internet, 25 megabits per second unlimited data plan with select Verizon Business smartphone plan savings. Terms apply.
Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Daybreak Weekend, our global look at the top stories in the coming week from our Daybreak anchors all around the world. Straight ahead on the program, we'll get you set for a couple big earnings reports from Tesla and Netflix. I'm Nathan Hager in Washington.
I'm Caroline Hepke in London, where we're looking ahead to European bank earnings, including from Barclays.
I'm Doug Krisner, looking at how rare earths will be a topic when Australia's Prime Minister visits the White House in the week ahead.
That's all straight ahead on Bloomberg Daybreak Weekend. On Bloomberg 1130 New York, Bloomberg 99.1 Washington, D.C., Bloomberg 92.9 Boston, DAB Digital Radio London, Sirius XM 121, and around the world on BloombergRadio.com and the Bloomberg Business app.
Good day to you. I'm Nathan Hager. We begin today's program with earnings. 90 companies on the S&P 500 open their quarterly books this week. We want to focus on two of the big ones, Tesla and Netflix. Here to get us set for what to expect from the EV giant this week is Steve Mann, Senior Autos Analyst for Bloomberg Intelligence. Great to have you with us on the weekend program, Steve. I mean, this is the quarter where we got that record delivery number, right? Wasn't it close to 500,000 vehicles sold? What's that going to mean for the numbers you're keeping an eye out on?
Thanks, Nathan. Yeah, they did have a record shipment for the quarter on EVs, but they also had a record shipment on their battery storage business too. Not a surprise because look, the 7,500 tax credit, EV tax credit, it went away at the end of September. In the U.S. So there was a lot of consumer coming in the market, taking advantage of that $7,500 credit and bought a lot of EVs. So, we saw record EV sales for Tesla. They're not alone. GM also had a record sale. Ford, if it's not record, it's almost a record sales as well. So the industry really got a boost. But I think the most important thing now is what do we expect in the coming quarters, which is, a slowdown.
Yeah, so what do we expect given that these subsidies are going away? I mean, it stands to reason that we're probably not going to see these kind of blowout delivery figures in quarters to come, right?
Yeah, absolutely not. Two ways that we're looking at this. First, in the near term, definitely some challenges for Tesla as well as the rest of the EV market. Rivian and Lucid to name a couple. There's been a lot of pull forward demand into the third quarter. So expect kind of weak earnings, weaker cash flow in the next couple of quarters for these EV makers. But long term, it's going to be an interesting market because without the 7,500, you're definitely going to have less buyers there will be buyers, but less buyers in the marketplace. And there are a lot of products out there. Like in the last 2-3 years, with the Biden administration pumping a lot of money into the EV market, every automaker, rolled out new products, expanded capacity. So there's going to be a lot of new EVs out there. We actually expect price competition, right? Price competition, and wouldn't be surprised there's some consolidation in the marketplace as well. We started to see that. GM just announced they're going to book $1.6 billion in write-offs on EVs. We expect they probably going to have to right-size their product portfolio as well.
Yeah, so we saw the new products as well, specifically on Tesla's side, and those finally lower-priced models of the Model Y and the Model 3. What could that mean for Tesla's outlook and for their margins as well?
Yeah, if you think of the flip side, it could be an opportunity, right, for Tesla. They are the largest EV maker in terms of sales globally, and in the US, one of the biggest, definitely biggest in the US. So it's also an opportunity for them potentially gain market share. They are one of the very few profitable EV makers in the world. So launching those products for broader appeal makes sense. If you look at social media, there's actually now talks about them, revisiting the earlier plans of rolling out the Model 2, which is even a cheaper vehicle. So if they can do that, they may be able to gain market share.
You mentioned the record for battery storage in Tesla's latest quarter as well. Of course, there's a lot of ambition in this company, not just from EVs, but from the autonomous vehicle side, robo-taxis. Right. Where should the focus be for investors as we get ready for this quarter to be explained?
Yeah, I think, when they release earnings and on the conference call, wouldn't be surprised that Elon Musk will primarily focus on their AI initiatives, right? Robotaxi is probably the only business that we have better visibility on driving the top line and the bottom line. We think that's probably going to come through in 2028, not immediately. They've rolled out robotaxi in Texas and parts of California. They're looking to roll it out in other states, maybe at least 2 more before year end. But the financials don't really roll in until then. But robotaxi is probably the earliest. The business is going to have the earliest impact on their bottom line. Optimus robot, I think it's going to be a while. There's some technical issues behind Optimus robot. It's going to be hard to convince other automakers to adopt humanoid robots. So, any Optimus sales or adoption will probably be more of an internal, within the confines of Tesla.
All right. Well, thanks for this, Steve, as we look ahead to Tesla earnings later on this week. That is Steve Mann, Senior Autos Analyst for Bloomberg Intelligence. Now let's turn to the other big earnings story we've got our eye on this week. That would be Netflix. The streaming giant opens its third quarter books on Tuesday. And for more, we're joined by Geetha Ranganathan, Senior U.S. Media Analyst for Bloomberg Intelligence. Great to speak with you, Geetha. And I guess Netflix is expecting another great quarter. I mean, they've been guiding for something like double-digit revenue growth, right?
Absolutely, yes. So, as we kind of look forward to Netflix third quarter earnings, one of the things that we want to highlight, because Netflix no longer discloses subscriber numbers, but the 2 numbers that, everybody's looking for, especially on the street, one is revenue growth numbers. And as you just pointed out, yes, double-digit growth. That's what we're looking for. The magic number for this quarter is going to be 17%. And of course, again, we're going to look for guidance for fourth quarter. Consensus right now expects about 16%. So, double digits, high teens, that's kind of what we're looking for. But really the headline for, the third quarter as well as for the second half, I think as a whole is just the content slate. So Netflix management themselves have kind of referred to the content slate this year, especially in the second half, being somewhat of an embarrassment of riches. They've had some of their biggest titles debut on the service. So we're talking Wednesday, we're talking Stranger Things, We're talking Squid Game, all of their biggest hits coming aboard on the platform this year. But what's really turned out to kind of be an absolute sleeper hit in the third quarter is K-pop Demon Hunters.
Oh, yes.
Nobody saw this coming. This was absolutely monstrous, huge. So we just saw 500 million viewing hours just in the third quarter alone. I think by the end of this year, we're probably going to see about 1 billion hours. This is their biggest movie of all time on their service. So just a breakout film that has really driven engagement meaningfully. And I think we're going to see that reflected in the numbers.
So just given how bonkers K-pop Demon Hunters was for Netflix, is the bar really high for them? If they don't meet the expectations that they've put out there, is that going to put a hurt on the stock?
So the one thing I think that we're going to watch for, I think 3Q is definitely going to be strong. The one number that can probably cause some nervousness is going to be if they actually release guidance for 2026. So last year, the first time that they issued guidance for 2025 was when they reported third quarter 2024 earnings. So the expectation on the street is, okay, they're probably going to give us a 2026 guidance number. Again, remember, revenue for this year, the revenue growth number for the full year, again, that the magic word there, double-digit revenue growth, it's actually 15%. Can they keep that up? So if it comes in much lower, if it comes in lower than I would say 13, 14%, yes, that is going to probably cause some nervousness. So yes, talking about that high bar, all of this engagement metrics kind of really playing into that. And then the other metric that we're kind of looking for with Netflix, apart from revenue, is margin. So this year, I think their margin growth is going to be really strong. I think they've already guided to 30%. It's probably going to be a little bit ahead of that. They're probably going to raise guidance. So again, next year, if they're a little bit softer on that number, again, maybe that causes a little bit of a pullback in the stock.
What's going to be driving the margins for Netflix in quarters going forward? Is it going to be growth in subscribers? Is it going to be revenue from advertising?
Yeah, I'm really glad that you brought it up, because now that they don't disclose subscribers anymore, it's a little bit hard to get transparency. And again, just for full disclosure, they haven't actually disclosed any hard metrics around advertising either. So we don't necessarily know exactly what the advertising revenue is. Of course, there have been some guesstimates that it was probably around $1 billion and change in 2024. That's probably going to be upwards of $2 billion this year. But then you're absolutely right. We're expecting a significant ramp up going into 2026. And that is going to be one of the major drivers for both the top line growth as well as operating margin. So for operating margin, you need strong top line growth, but you also need content cost rationalization. And that's really what we've seen Netflix do extremely well. So they're, we're seeing revenue grow, mid-teens levels, sometimes even high teens, but content costs grow only about mid to high single digits. And that's where we're seeing this huge jump in operating margins year after year.
And when it comes to content cost management, where is the focus going to be, do you think, for Netflix? Is it going to be on that original content, the scripted stuff, or is it going to be more reality shows or even more live shows?
It's going to be all of the above. So we've seen them really do a very good job. Originals, as you pointed out, drives majority of the viewership on the Netflix platform. We've seen that in all of the engagement stats that they disclose from time to time. That makes up about 50 to 55% of their content budget. But you're absolutely right. They have a really nice mix. They also have a good amount of licensed content, the content that they get from the Disneys and the Warner Brothers and the Paramounts of the world. So they're making very concerted investments across the board.
All right. Well, thank you for this, Geetha. Really great having you on with us. That is Geetha Ranganathan, senior analyst for U.S. media for Bloomberg Intelligence. And coming up on Bloomberg Daybreak Weekend, we'll look ahead to bank earnings out of Europe, how they may have been affected by rate cuts and geopolitical risk. I'm Nathan Hager, and this is Bloomberg.
For enterprise organizations, managing all your food needs is a tall order. But with EasyCater, you get a single workplace food vendor with the tools and resources to make it easy. giving teams across your organization an easy way to order from a huge variety of restaurants, all on one platform. All while consolidating your corporate food spend so you can control costs, streamline billing and payment, and simplify reporting. EasyCater, your business tool for food. To learn more, visit easycater.com/podcast.
This is Steve Covino from Covino & Rich, here to tell you Toyota's legacy has been standing tall for generations. From pioneering hybrid technology to redefining the standards of safety and efficiency, with each innovation, a commitment to progress. And with a legendary lineup of in-stock trucks, including the ultra-rugged new Tacoma and heavy-duty half-ton Tundra, you can experience the legacy of Toyota for yourself. Visit buyatoyota.com, the official website for deals, to find out more. Toyota, let's go places.
Residents at Brightview Senior Living Communities enjoy enhanced possibilities, independence, and choice. Brightview Dulles Corner and Great Falls offer vibrant senior independent living, assisted living, and memory care services through various daily programs, chef-prepared meals, safety and security, transportation, resort-style amenities, and high-quality care. Take financial possession of your apartment by December 31st, 2025 and save. Discover more at brightviewseniorliving.com. Equal housing opportunity.
This is Bloomberg Daybreak Weekend, our global look ahead at the top stories for investors in the coming week. I'm Nathan Hager in Washington. Up later in our program, we'll look ahead to a key meeting between Australian Prime Minister Anthony Albanese and President Donald Trump. But first, European banks have seen €1 trillion surge in value since late 2022 as interest rates have come down. But that may come under pressure from growing fears over sovereign risks in France and threat of a new bank tax in the UK, while rate cuts and geopolitical risk are added burdens. With the UK's biggest banks, Barclays, NatWest, and Lloyds, reporting earnings in the next few days, we want to get more from Bloomberg Daybreak Europe anchor Caroline Hepker in London.
Nathan, European banks are eyeing Wall Street after a bumper set of earnings for the third quarter. JP Morgan, Goldman Sachs and Citigroup all comfortably beat estimates with a combined profit of more than $20 billion. But the CEOs of a number of US giants did sound alarm bells that market optimism is perhaps overblown. JP Morgan's Jamie Dimon pointed to a pair of recent bankruptcies in the private credit space.
I probably shouldn't say this, but when you see one cockroach, there are probably more. And so everyone should be forewarned on this one.
So Dimon's comments came amid an increasingly complex macroeconomic picture. You've got global trade wars, tariffs and political turmoil for the banks to think about. So against that backdrop, lenders on the other side of the Atlantic are also looking to balance risks and opportunities. So how have European banks been faring? So joining us now is Bloomberg's finance reporter Will Shaw and Philip Richards, Bloomberg Intelligence's senior banking analyst. Welcome to both of you. Thank you for being with me. Philip, can I start with you on the third quarter earnings? How are European banks expected to fare, specifically against those Wall Street lenders who've reported just in the last few days?
Yeah, so we've had obviously the US banks reporting, and they've actually come across quite a lot stronger than the market was expecting, particularly on the investment banking side. Seen some quite hefty beats coming through on fixed income, equity trading, also quite a big return in terms of M&A, and those also quite ahead of consensus coming through as well. But also on the retail banking side as well, lending growth has been higher than most people expected. A couple of wobbles on the credit quality side, but overall they've been very strong. And so the question is how much of that is going to follow through to the European banks in the week coming ahead. I think bottom line is I think they should follow quite similar trends. I mean, there are obviously a lot of overlap in terms of the investment banking space where the banks are operating. Therefore, I think they could be fairly hefty beats there as well.
Hefty beats expected. Okay, that's interesting. Will, how have the Wall Street banks done during the earnings season? What are the expectations then, in your view, for the big UK lenders, including, of course, Barclays coming up?
Yeah, so I think, like Philip says, the Wall Street banks have really smashed it, I suppose is the technical financial term. Morgan Stanley's stock traders soared past expectations. They were beating rivals on a surge in trading activity around turbulence from Donald Trump's policies. Goldman Sachs also posted record third quarter revenue, down to like a resurgence in deal making as M&A began to resume. People now obviously looking ahead to Barclays. Now, Barclays equities, the analysts that we take note of, they expect equities traders to make about £750 million. That would be an increase of about 8% on the same period a year ago. Then macro traders are sort of tipped to make about 1.2 billion. That'd be up about 2%. Deal makers looking at perhaps making around £600 million in banking fees and underwriting revenue. Again, that would be an uplift of around 2%.
So those are the numbers we're watching out for then. Philip, it's obviously been, the context in Europe, this fantastic 4 years. Interest rates have fallen and therefore, you've had a good kind of tailwind for European banks. We've seen that in the share prices. But you've highlighted, of course, that there are more threats now into the second half of this year. What are the big challenges for the European banks?
Yeah, I think that's fair. I mean, the sector's been on a huge run, as you flagged there. I mean, up about 160% over that period. That compares to the wider market about 40% higher. So a big outperformance from the European bank. But what I would say is they were at very distressed levels at that time when that run started. And where we are today, yes, we're back at basically the highest level since the great financial crisis over 2007, 2008. So we've had this rally, but it has really been supported by fundamental improvements. Obviously interest rate hikes have supported it. The economy is in a better position now. Credit quality is all low. So it's not just about is it a bubble in terms of the share price. Actually, the underlying earnings is much better. And you talk about the risk going forward. I think actually some of those risks have already come through in terms of interest rate cuts. We've seen that now in both Europe and the UK. And actually from here, maybe one more cut in each market, but probably quite minimal from here. So a lot of that pain has happened already. And actually, if you look at economic growth, say conditions are still slow, but they're getting better. And certainly economists have been upgrading forecasts overall. And therefore, those things could help with the banks.
We heard a little bit of JP Morgan CEO just about the issue with risky loans. I mean, some people, are concerned about this, others are not. Are there signs of exposure amongst European banks to riskier loans? What's the concern there in your view?
Yeah, well, this follows through from two big problems in the US for Tricolor and First Brands. And the comment from JP Morgan was basically that you don't often get just one or two hiccups. Normally they come together. And that's a sign of stress in the market. And what I would say, actually, in the UK or even across Europe, we haven't really seen that yet. There's not really been many big cases coming through. Credit quality remains actually very strong across the sector. But what I would say, these are well below normalised level, the current charge-offs. So they will gradually rise and there will be some negatives. But overall, if you look at it on a longer-term perspective, actually credit quality remains very strong for the banks.
Again, Will, I want to bring you back in on the UK banks and on Barclays. I mean, you focus on Barclays and what they're doing in lots of detail. And I did also think that the stories around Barclays and their expansion in the US is very interesting. I mean, they're spending, $1 billion on the refurb of their New York trading floor.
It seems enormous, doesn't it? Yeah. Like you say, they're preparing to spend at least $1 billion renovating their skyscraper, which is in New York's Times Square. They'll begin construction on that tower in the middle of next year. And it's currently in the design phase and it's expected to wrap up in about 2030. I think a lot of people were surprised at the sheer scope of the expenditure there. Barclays is obviously Britain's investment bank. It's big here. It's not always as visible in the US as perhaps some of the other rivals over there, the big five, Goldman, Citigroup, Morgan Stanley, etc. And I think it was really interesting to see them put their money where their mouths are and show just how committed they are to the US market with such an enormous expenditure there.
Well, just thinking about that, if Barclays is the UK's investment bank, the policy outlook, I think, is very interesting, Philip. We've got the budget coming up in November, and there's been plenty of talk, not just of deregulation and of things like changing the ring-fencing rules for banks in the UK, but also the possibility of a bank windfall tax from the Chancellor Rachel Reeves. What do you think about it?
Yeah, it's a bit of a contrast, isn't it? It's give with one hand and take away with the other.
Yes.
So promises of deregulation to match the US, which obviously that's the main word in the US at the moment, are supportive. And as you say, if there's less in terms of the ring fencing, that could release capital for the banks. It could lead to a reduction in operating expenses. So they were positive. But then on the flip side, these banks are now obviously in a much more profitable position, 15% plus profitability, return on equity for the largest UK banks, and that's obviously quite attractive to a chancellor who's struggling to raise cash.
I suppose shall I ask you what the odds are, do you think, of her actually doing it or not? Maybe this is impossible.
It's impossible to say. I mean, it's been mentioned, it's been widely talked about in the market, but the chancellor's obviously keeping her cards close to her chest, as it were, and therefore she's not revealing anything yet. We have seen it across a number of other European markets, so it wouldn't be out of the blue. We've seen it in Poland, we've seen it in Italy. So yes, it's possible, but who knows?
Okay, yeah, so windfall taxes, people might be thinking about that in the industry. Well, in terms of other things then that are happening on the banking front and trying to beef up trading, that's the other thing. I mean, the US banks are so good at that. And does the UK have something to rival that? You know, if maybe there is a windfall tax coming, is there going to be a big pot to tax?
Yeah, so Adil Khan, who's global head of markets at Barclays, he's been making a bit of a concerted push into macro trading this year. They've hired more than a dozen senior macro traders as it looks to make the most out of all the turbulence in the bond market stemming from the Trump administration. So they've been hiring people from the likes of JP Morgan, Millennium, Nomura, Morgan Stanley. They're all big names. And it's essentially part of the CEO Venkat's 3-year plan to boost returns across the investment bank. He's identified priority areas which include European rates, as well as equity derivatives and securitized product trading. So yeah, they do seem to be really flexing their muscle in this area at the moment.
And I think no conversation on any topic, frankly, in finance or banking is without the AI factor, artificial intelligence and banking. So interesting. You've also reported on Barclays shifting some of its top executives to try to lead an AI push. What would an AI push look like for Barclays?
Well, I mean, all banks obviously are thinking a lot about AI at the moment, what it means for speeding up, creating greater efficiencies, thinking perhaps about what it might mean for headcount going forward. Evident AI, which is a company which tracks performance in AI of different banks, it doesn't frankly rate Barclays particularly highly. I would expect Barclays to be looking around slightly nervously at the other Wall Street banks and seeing what they're doing. Are they at risk of falling behind? They're thinking about areas such as where generative AI can be used in parts of the trading floor to make things more efficient. They've also promoted Antoinette O'Neill to Group Chief Information Officer in charge of areas including AI strategy. So they are on this.
Interesting. I think we should also put it into context and listen in to Karen Ward, also of JP Morgan Asset Management, of course. She's their chief market strategist, who was speaking to us in the last few days on Bloomberg Radio. I just thought this was really a great nugget that was so interesting about AI and whether or not it's going to benefit the UK or not. This is what she had to say.
The thing I will say with conviction is if AI delivers productivity benefits, the UK will benefit. One of the things in markets at the moment I find very hard to make sense of is the idea that the tech giants will grow their earnings at 20% forevermore, and that's why you pay 30 times earnings for them. But yet global corporate is going to have earnings growth of, low single digits. That can't make sense.
Yeah, absolutely. Thank you so much to both of you for joining me. Really appreciate your views. That is Bloomberg's finance reporter Will Shaw and Philip Richards, Bloomberg Intelligence's senior banking analyst. We will have full coverage and analysis of the UK bank earnings and European bank earnings in the days ahead, including Barclays. Quarterly earnings due out on the 22nd of October. Also, we'll have NatWest and Lloyds to bring you on Bloomberg Radio. I'm Caroline Hepker here in London. You can catch us every weekday morning here for Bloomberg Daybreak Europe, beginning at 6 a.m. in London. That's 1 a.m. on Wall Street. Nathan.
Thanks, Caroline. And coming up on Bloomberg Daybreak Weekend, Australia's Prime Minister is set to meet with President Trump. What implications could that have for the Australian economy? More on that next. I'm Nathan Hager, and this is Bloomberg.
How many vendors does it take to meet all your organization's food needs? Just one. EasyCater, the workplace food platform that lets teams order from a huge variety of restaurants, over 100,000 nationwide, all through a single vendor. In addition to all that variety, EasyCater also gives you full visibility of your organization's food spend with invoicing, centralized reporting, and seamless integration with expense management systems, all on one platform. EasyCater, your business tool for food. To learn more, visit easycater.com/podcast.
This is Shirley Strawberry from the Steve Harvey Morning Show. Toyota has been building a legacy of excellence for years, from developing hybrid technology to upping the standards of safety and efficiency. Toyota is always innovating, always making progress. And with a superior lineup of in-stock SUVs, including the adventure-ready RAV4 and capable, affordable Corolla Cross, you can experience the legacy of Toyota for yourself. Visit viatoyota.com. the official website for deals, to find out more. Toyota, let's go places.
Residents at Brightview Senior Living Communities enjoy enhanced possibilities, independence, and choice. Brightview Dulles Corner and Great Falls offer vibrant senior independent living, assisted living, and memory care services through various daily programs, chef-prepared meals, safety and security, transportation, resort-style amenities, and high-quality care. Take financial possession of your apartment by December 31st, 2025 and save. Discover more at brightviewseniorliving.com. Equal housing opportunity.
This is Bloomberg Daybreak Weekend, our global look ahead at the top stories for investors in the coming week. I'm Nathan Hager in Washington. Australian Prime Minister Anthony Albanese will be in the nation's capital in the week ahead to meet with President Trump. For a preview, let's get to Doug Krisner, host of the Daybreak Asia podcast.
Nathan, several issues will dominate the conversation when Albanese visits the White House. Perhaps the most important topic, critical minerals. For a closer look, I'm joined now by Bloomberg's Paul Allen in Sydney. Paul, thanks for helping me preview the meeting. You and I have talked in the past about Australia's vast reserves of rare earths. If you had to look at a potential deal between the U.S. and Australia where rare earths are concerned, what might it look like?
Well, there's certainly a lot of speculation around this, Doug, the prospect of a deal around critical minerals, because we've heard President Trump talking in the past about ideas like, well, maybe we could take over Greenland or involvement in Ukraine. And at the core of a lot of these statements is these countries' critical mineral reserves. And Australia, depending on how you slice and dice it, has either the largest or the second largest critical minerals deposits in the world. But the limitation here is the refining of those deposits. Australia's got the mines. It certainly has the scope for plenty more, but all of the processing happens offshore, mostly in China. Some of it happens in Korea as well. So any discussion around a potential deal likely to focus in on how these minerals get processed. And there's been some speculation in the media that there could be some sort of deal with the US in the range of $700 to $800 million, but beyond that, we don't know anything. The government's been very tight-lipped about this, which again leads to future speculation that we very well could see something get announced when Anthony Albanese meets President Trump.
So, Paul, what is preventing Canberra from building up refining capacity in Australia when it comes to the processing of rare earths?
Certainly the political will exists. I think the question is more a commercial one. I can give you an example of one company. It's a small company called Australian Strategic Minerals. It's seen a very healthy run-up in its stock price on the ASX. So this is despite the fact that it doesn't actually have a mine in Australia. For as long as I can remember working for Bloomberg in Australia, ASM has been talking about starting a mine near a town called Dubbo in New South Wales. It's still about to start its pre-feasibility stage, so it's taking a long time. There's certainly a desire to get this done, but critical minerals processing, very energy intensive. It generates a lot of toxic waste as well. So putting together these things seems to be the major hiccup. The biggest critical minerals miner listed on the ASX is Lynas, but it does all of its refining in Malaysia, but it does have a mine here in Australia. So it does speak to this broader problem of the cost, the pollution, the regulation of getting processing underway in Australia.
President Trump was saying earlier that the U.S. is in fact in a trade war with China. How is this being viewed in Australia right now, the tension between Washington and Beijing?
It has forever been a very, very difficult tightrope for Australia to walk because on the one hand, China is Australia's largest trade partner by some considerable distance, and it was not that long ago when Scott Morrison was Prime Minister that the country was reeling under trade strikes from China for all sorts of things, from coal to wine to barley. And when the new government got elected here 4 years ago, the Albanese government, that was seen as something of a reset, and those trade strikes have since been wound back and the relationships improved again. But it's well known that China is no fan of the AUKUS agreement between the United States and the United Kingdom. The United States is Australia's most important ally. The relationship there is very, very close as well on a diplomatic level. We heard from the Deputy Prime Minister Richard Marles saying that no country is closer to the US than Australia in terms of how we engage and the level of trust that is there. So navigating that tightrope, particularly when your closest ally is saying it's in a trade war with your closest trading partner, it's a really difficult foreign policy balancing act.
Paul, I'd like to pivot to another area of importance for the Albanese visit to the White House, and that would be the AUKUS Defense Pact. I know this is an area where there has been a great deal of tension, and I think things are still simmering a bit. Can you give me some context here and bring me up to speed on where this conversation is currently?
Domestically, at least, there is bipartisan support in Australia for this defence pact. It was initially announced by Scott Morrison, Joe Biden and Boris Johnson, or it might have been Rishi Sunak. It's hard to keep track of what's been going on in the UK sometimes. But that was a Liberal government that announced that policy in Australia. Since then, we've had a change of government to a Labor government, and that defence pact is still in place. So politically, at least, it's ironclad. Of course, within the political parties, there is some distaste for it. Within Australia also, as you can imagine, there are significant segments of the public that aren't in favour, but for Australia's part, this is going ahead. Billions of dollars have already been made in down payments to the United States to improve or build up its shipbuilding capability. But in terms of the relationship between the three partners in this pact, I think that's where the tension's really been coming in, because of course the US, under the eye of Elbridge Colby, has been running a review into this, and it's understood, certainly within Australia, that Mr Colby is somewhat of an AUKUS skeptic. Now, the British Prime Minister Keir Starmer has been trying to calm everybody down. He's a supporter of AUKUS, and he says, look, when I came to power, we also had a review. It's quite natural. You know, the Trump administration's back in power in the US. Of course they want to have a review. Well, there wasn't a review in Australia when the government changed, but that might be illustrative of it being a bipartisan policy. But there's certainly nervousness now in Australia that, look, we've made these down payments. We're committed to this plan. We need submarines. Please don't cancel.
So will the Albanese visit bring a sense of closure to this chapter, or is the conversation likely to continue before a final decision is made?
We would find out very soon, and there's a degree of optimism on the Australian side. The Deputy Prime Minister, Richard Marles, was in the United States back in August to really lay the foundation and the groundwork for this visit. He met with J.D. Vance, he met with Marco Rubio and Pete Hegseth as well. There is a photo of them all together smiling, and Richard Marles says, look, the group shared only positive words about AUKUS. So he's confident that it's going to go ahead. Anthony Albanese is actually on holiday this week. He's having a week off for the first time since he was won re-election, but it's understood that he's taken a lot of homework away with him on holiday to read up on this and work very hard diplomatically to make sure that this proceeds.
Paul, I'm going to change gears on you once again because I know you spent several days last week at the ANZ Investment Conference in Sydney, and you had quite a few conversations there. In particular, the talk you had with the Assistant Governor and Chief Economist at the RBA, Sarah Hunter. I'd like to play a portion of that interview, and I was hoping that you might help us set it up.
Absolutely. This was at the Citi Australia and New Zealand conference that's organised by Citi, and there is always a range of fascinating speakers there. And it was really great to be able to talk to Assistant Governor and Chief Economist Sarah Hunter at the RBA, because it's going to be a very important couple of weeks for the Reserve Bank. We're going to have third quarter consumer prices come out. We only get consumer prices quarterly in Australia. And we've got inflation back inside the RBA's 2 to 3 target band. But the central bank is still taking this very slow and cautious approach towards easing. It left rates unchanged at its last meeting. And the next decision's coming up in the first week of November. So Sarah Hunter, I was asking her about inflation, and she was expressing caution again that some pockets are remaining stubbornly sticky.
We've had now 2 months of the monthly indicator for the 3 months of the September quarter. And there's just a couple of categories that look like they've come through a little bit stronger than we were anticipating. The first of those is housing. So that's an amalgamation of rents and in particular new dwelling construction costs. And the second is market services. And those ones are particularly important because they are core components of the CPI. They will come through in the trim mean. And so we're just monitoring those two. But given that they've printed through a touch stronger than we expected, we think that will then show up in that full quarterly print that we get at the end of October.
So how much weight do you think the board is going to be placing on that before deciding its next move?
I mean, all data matters. All data is important. Obviously, inflation data is very important because it's it's core to the mandate of us keeping inflation in that 2 to 3% target band on an ongoing basis. So yeah, definitely it's going to feature. Of course, we also, as part of the November meeting, will be publishing on the day of the meeting itself our updated forecasts in our November SMP. So they'll also get that information as well, and obviously everyone else will too, and that will give you a real sense of how we've read the data, whatever it turns out to be, and what it means for the outlook.
Yeah, I want to talk about the forecast a little later, but just circling back to that point that you made about house prices, and this is something we typically see when we're in an easing cycle. House prices tend to go up, often has an impact on rents as well. So what are the recent pickup telling you about getting inflation back to target?
Yeah, so house prices specifically, of course, they're not directly in the CPI, but they are one of the first, typically, domestic transmission channels for monetary policy. So it's not a surprise that since we started cutting rates in February, we've seen a little bit of a lift in the momentum in the housing market, and that's come through in prices. And then we'll expect to see that transmit through into new dwelling construction activity. So the viability of projects improves and lift in demand for dwellings, and that will come through into construction over the forecast. And then also it'll flow through a little bit into consumer spending as well. We're really monitoring that channel and thinking about what that then means for inflation. We're not surprised that we've seen the pickup because we've seen it before in cutting cycles. So what we've seen isn't out of line with previous periods. But obviously we're monitoring it, and it's really, for the board, what they're really focused on now is keeping inflation around about the middle of the target band, particularly that underlying trim mean metric, because that's our best lead for where headline inflation will be over the medium term.
How much confidence do you have that inflation will be in the midpoint of that target band by 2026?
Well, look, forecasts, inevitably you get things a little bit wrong at least. Sometimes you get them quite a lot wrong. And so that's the job for me and my team, is really looking at what's happening, updating our forecasts, taking on the new information, taking on what's happening around the world as well, and what that actually means for the outlook. Well, obviously, that's very much what we're trying to achieve. That's what we want to achieve. We've got to a point now where obviously we had that trim mean inflation was 2.7% in the June quarter, and the labour market had been, we think, relatively stable in recent months. We really would like to keep it there, trim mean around the middle of the target band, headline eventually there too, and the labour market stable. But we've got to respond to what the data tells us, and what else might be happening that we didn't foresee, and you can always get surprised by shock. So that's the job, and you're forever looking forward, and things are always changing. But I hope that I can come back in a year and that's what we've achieved, but let's see.
All right, that was the RBA's Chief Economist and Assistant Governor there, Sarah Hunter. She was speaking with me at the Citi Australia New Zealand conference. And it was interesting, Doug, because I was also speaking to the Citi Australia CEO, Mark Woodruff. For his part, he thinks the RBA's done with its easing cycle for now, 3.6%, and that's the end of it.
Paul, I was noticing that TD Securities was saying the economic data that will be released over the next couple of days for Australia may be stronger than expected. Paul, thank you so very much. Bloomberg's Paul Allen joining from Sydney. I'm Doug Krisner. You can catch us weekdays for the Daybreak Asia podcast. It's available wherever you get your podcast. Nathan?
All right, thanks, Doug. And that does it for this edition of Bloomberg Daybreak Weekend. Join us again Monday morning at 5 a.m. Wall Street time for the latest on markets overseas and the news you need to start your day. I'm Nathan Hager. Stay with us. Top stories and global business headlines are coming up right now.
How many vendors does it take to meet all your organization's food needs? Just one. EasyCater, the workplace food platform that lets teams order from a huge variety of restaurants, over 100,000 nationwide, all through a single vendor. In addition to all that variety, EasyCater also gives you full visibility of your organization's food spend with invoicing, centralized reporting, and seamless integration with expense management systems, all on one platform. EasyCater, your business tool for food. To learn more, visit easycater.com/podcast.
Wells Fargo announced a new $20 million program in 2025, teaming up with nonprofits to support small business owners. That's how Wells Fargo is helping strengthen small businesses and communities. Wells Fargo, the bank of doing. Learn more at wellsfargo.com/say-do.
This is Steve Covino from Covino & Rich, here to tell you Toyota's legacy has been standing tall for generations. From pioneering hybrid technology to redefining the standards of safety and efficiency, with each innovation, a commitment to progress. And with a legendary lineup of in-stock trucks, including the ultra-rugged new Tacoma and heavy-duty half-ton Tundra, you can experience the legacy of Toyota for yourself. Visit buyatoyota.com, the official website for deals, to find out more. Toyota, let's go places.